Good afternoon, good morning, everybody, ladies and gentlemen. Welcome to the EuroEyes 2025 annual results presentation. It's our pleasure to introduce to you the management joining us today. They are Dr. Jo Sloth Jorgensen, Chairman, Executive Directors, and Chief Executive Officer, and Mr. Marcus Westcar Blanklow, Executive Directors and Chief Financial Officer. Following the management's presentation, there will be a Q&A session. During the Q&A, if you wish to ask any questions, please type your question in the Q&A box on the right-hand side of the page, and we will read it out afterwards. Please kindly note, Tencent meeting is for listen-only mode. May I now pass the time to Dr. Jorgensen to start the presentation, please?
Yes, hello everybody. Good morning here from Hamburg in Germany. I'm going today to present you 2025 annual results. I'm sitting in Hamburg and our CFO, Mr. Blanklow, is sitting in Frankfurt, and we will let you through the different parts of the annual result. Please, the next slide, please. Okay. This year we did two major transitions, and one of them was in Switzerland and the other one in Holland. I wish to start with that today, that you have a little feeling about what was going on this front before I come to the results. As you know, we were listed in 2019, so we had proceeds from the listing, and this year we have been looking for that a long time. We until now did one in London, one in Mannheim. So we have been very selective there, but this year we found two at this year. The one was in Switzerland. And Switzerland is a very important market for our high-end products here in Europe. And also with the competition landscape is also very favorable. And we managed to get a company with 9 clinics in Switzerland and 8 in Switzerland and 1 in London. So it was taken over the 15th of October. Because of their business model, the business was deteriorated, and it was run from non-doctors, and let's see. But they had managed to have a good revenue and put a lot of money in marketing, but had many costs. So we managed to take it over for us a very favorable price. Of course, we need to rename that, so the part is named Betterview, and we renamed that to EuroEyes. And also because of Optional, the signing, it was no business running. We took over with a very low revenue. So let's see, from the 15th of October, end of the year, we didn't have that revenue, but we had the cost. So it can be mirrored in our earnings. You'll see the earnings is we had a good revenue and EBIT, but the earnings have decreased, and this is one of the reasons for that. We had cost. But we have now this, this for almost a year, and it looks very good. I would not go into detail here, but we have managed to get it up, and it looks like to be a very good clinic group. We will implement also what we are strong in, that's the treatment of presbyopia, and so I think we will hear more about that during the year. The other strategic expansion was by fire. You have heard about that. We have done the signing. So we are now right in the process between signing and closing. It's 13 clinics, and it's 3 major clinics, and it's a fantastic group. They are this year doing a revenue of last year, 2025, a revenue of 62 or 64 million and EBITDA of 13.2 million. So it's a very strong group. And what is very good is doing exactly the same as EuroEyes. They are strong in presbyopia. They all out of the pocket. So you can see, maybe it's also tell a little about our market and our product managed to do over 60 million revenue in a small country like Holland. So it tells a little about what's lying in front of us. And so you know more about that. We will then later in some time to send out a circular. It's a very major transaction, so we will need to follow the exchange rule, and we are now doing a circular and a due diligence and so on. So I think closing will be later on in some months or weeks. So we will come up upon. So this was, let's see, the extended footprint to Switzerland and Netherlands this year, which will put EuroEyes into a new level. Next slide, please. Here you have the clinic. It's you see it's overall in Switzerland in all major cities. You must be aware of Switzerland is a very good target for high-end products. And right now, the two front runners in Switzerland is Zurich and Lugano, but we have the French part of Switzerland with Lausanne and Geneva, German, and the Italian part. So we go over brand new clinics. Everybody know how much it costs to put up a clinic. So we took them over. We took over the staff. We did the asset deal. So we don't have any old problems to take care of. So we could literally start from the new. And in London, we also took over a clinic in Westfield. So we have 3 clinics in London. And this clinic is running very already after half a year. So next page, please. Yes, and in Holland, you see the distribution, and you must see the strongest part of Holland. It is the middle to the southern part. The upper part is countryside. And as you hear, it's 3 operating facilities, Arnhem and Eschel and Amsterdam there, and the rest is satellites. And with these set up, they managed to do over 60 million euros of revenue, and they plan to go with 20% growth. So you have also see the cake until now, as they started, was about 36% growth. So they are very strong. And it's again presbyopia, trifocal lenses. We will also now implement what we have learned in London from London Vision Clinic, that they do treatment of presbyopia with the lens, and we do it with the lens. So we will really be customized in this area. Next slide, please. So again, here business model is 76% of the revenue is lens-based, and the rest is laser-based. So it's fit to our model. So what we are going to do also here is implement Presbyon, the laser-based business in Holland. Next place, yeah. And we also, next place again, we also not only took over the revenue, the businesses, but also a very strong management. And this is, of course, also very nice, while, as you may know, EuroEyes sometimes a little bit lack of hands, and we hope the Holland group can support us there. So I now come to the highlights of Fiscal Year 2025. And you see here two numbers. You see the upper numbers. This is including the 2.5 months we had the new group Switzerland, and below is without this. So we this whole better view now called EuroEyes from the middle of October. So you see they started from, because of this I mentioned before, started really in the basic. We grow year on year without them 10% in terms of revenue, and with them 11%. So we are almost now 800 million. That's without Holland. In terms of EBITDA, without them we grew 11%, and with them only 6%. Of course, we had two big costs. We lost money, but 240 million Hong Kong dollar, and by the EBIT we grew without them 17%. And this is a little what 18%. Yeah. So this is a little the highlights for the 2025. So you see here presbyopia treatment. It was really again the big growth in terms of revenue. So we are a presbyopic treatment. We are as a presbyopic group. So let's take the next slide. For Lawrence, maybe you can take this away. Sorry, I need to fix something the computer here. Yeah. Thank you. When you have here the demand for lens exchange and presbyon, you see here on the right side we are still a lens exchange. As you can treat presbyon or presbyopia by way of trifocal lenses or by laser-based. Laser-based is called presbyon. This is what we learned from vision clinic. You are seeing it's picking up, and we are very happy about that. And but the whole market, you will see that here, what we are growing is presbyopia, and what is very strong competition with is the classical laser, SMILE, and people, we see young people don't have that money, that high a budget. And you are seeing this is really also directed out in the market, where the people 45 plus, they wish to put themselves, they have the money, and this is the new lifestyle. When you go over to also rev by surgical type, your lens is here 56%, and refractive laser, SMILE and LASIK is only 25%. This is what we have seen during the year, and this is also what continue. And this also we see in Holland. It's not implemented here, while it will be implemented in 2026, but you will see it will be continuation. So next slide, please. And here you have the different groups with Holland. From Germany to China, we have 9 clinics in China. I must say, my personal opinion still here, the biggest, opportunity is still in China, and especially in presbyopia. It's such a huge market, and we haven't really digged into it. But we have put into marketing, into Little Red Book and into widgets. We have really implemented that, and I still see that as the biggest opportunity. But this is how you see it today in 2020 without Holland. Next time, 43 clinics in total. And Switzerland, I have shown you that and we expect a turnaround, that we get profitable in the second quarter of 2026. Next one. And Germany here, I call the powerhouse, but it's still where we have a revenue saw, and also think the potential. You can imagine when you have such a big country and you see a small country like Holland, how they really have managed to pull up the growth. So we can see which potential we have here, but those accelerated, especially in the second half year, and revenue saw in presbyopia by 14%, and myopia, that's laser vision correction, only 6%. Next one. And also England we had a difficult year. Let's see, 2024 with London Vision Clinic. London Vision Clinic was a clinic we acquired, and we saw that we were not happy in 2025 because of one thing. It's because London Vision Clinic was only a laser-based clinic. They didn't have really lenses, and this was spilled over. We saw that in general, it's worldwide. It's also in the US. It's in China in general. You see all clinics who only do laser vision correction. You see they are really have problems. We are good while we have presbyopia in the lens base, and because of different things, we were not only able to change this clinical setup because of autonomy and different things. But we have been that in 2005, so we have now that lenses get more and more, and so it will get even more. And our clinic, our new clinic, LEC, has also have a break even. So you saw a year-on-year growth of about 20%. The London group. This year will also come. Westfield will get into the clinic, and so this will also improve it. Although we don't do any marketing at all in Westfield, it seems to be a very good location, and it seems that this really, so with little marketing, will pick up very quickly. It's a good location. Next field. Denmark, yes. Denmark is a single but grows, and we have now in this year in the first quarter of 2026 put up a new marketing team. We have put a new online team. So we hope to push that here. The market in Denmark, it got double digit. Next time. And China, yes. China, as I said before, been in China since 2012, and I think one of the only clinic worldwide who have stayed there and who have grown there. We grow because of one thing, because of presbyopia. I think we are the group in China, the first in presbyopia market, and I think still we are the one who are doing this work best in China. So I think we are on a real big part. We are sitting up now. We have got in the beginning, we have got a new marketing team in China. We had our best months ever in March this year. So, as I said to you, never underestimate China. I think, like other high-end consumer brands, they have also the biggest market in China. So I think not in laser vision correction, but in presbyopia, I think China is a big market you need to be in, and you need to solve solution how to penetrate this market. And when you do it will be a good business. Next one. So I will now give the word over to Mr. Brachler. He will tell you about the financial numbers in detail. Okay, bravo.
Thank you, Dr. Jorgensen. Happy to take over and to add a little bit more detail to the information already given by our CEO. Next slide, please. So I think the overall message, after a disappointing 2024 last year, is that the group has returned to a growth trajectory. We had, including Switzerland, growth of 11%, and excluding the acquisition, organically grew by revenues by 10%, which is a very positive development. Also, EBITDA grew by 11%. As Dr. Jorgensen already said, the Swiss acquisition is a turnaround case. Therefore, initially, in taking in their results in Q4 of 2025, reduced EBITDA and profitability. So EBITDA only grew 6% if you take into account the Swiss acquisition. However, this is a controlled and planned investment in future expansion. And if you like, the Swiss acquisition had two components. One, as Dr. Jorgensen already explained, a very good purchase price. We paid for these 9 clinics 10 million Swiss francs, which, if you know that setting up these clinics and doing the investment would have cost us a multiple of that normally. And of course, the second part is that we had to take 1 or 2 quarters of losses before getting them turned around to our standard. But the good news is we're well on track and do expect, based on current information, to achieve a positive EBITDA from Q2 going forward. As I mentioned, that is true that the is down 1%, excluding Switzerland organically, which is basically the reflection of the business performance. It's up 13%. Next slide. To explain the impact of both Switzerland and the foreign exchange effect in a bit more detail, I've produced this slide. First of all, let me start with our overall performance. As I mentioned, we delivered solid growth during the period, with revenue increasing by 10% and EBITDA up 11%, both excluding the Swiss acquisition, reflecting continued strength in our core operations. At the net profit level, we saw a decline of 33% on a reported basis and 12% excluding the Swiss acquisition. Importantly, and I'd like to stress this does not reflect a deterioration in the underlying business, but is driven by 2 specific factors. First, as already mentioned, we recorded an approximately 18 million Hong Kong dollar impact related to our Switzerland turnaround case. This is, as I just mentioned, a planned and controlled investment phase, and we are making good progress. We expect this operation to reach EBITDA break-even by the second quarter of 2026. Second, we recorded an unrealized foreign exchange loss of around 10 million Hong Kong dollars. This arises from the mark-to-market revaluation of certain euro-denominated intercompany balances following the appreciation of the euro against the renminbi and also, of course, of the euro against the Hong Kong dollar. Let me highlight 3 key points regarding this foreign exchange impact. First, it is non-cash in nature and does not affect our cash flow. Second, it relates purely to intra-group balances. And third, we have full flexibility on the timing of settlement, allowing us to manage exchange rate movements over time. As a reminder, our functional currency is euro, while we report in Hong Kong dollars. As a result, our reported net profit may be affected by translation and revaluation movements, which do not, I emphasize, do not reflect the underlying operating performance of the business. Looking ahead, Excluding these temporary and non-cash factors, our business continues to perform well. We expect continued EBITDA improvement in the Switzerland operation towards break-even and reduced volatility in reported earnings as these items normalize. In summary, our core business remains strong, and we are confident in our trajectory going forward. Next slide, please. Through the Swiss acquisition, our geographic diversification continues. The pink portion of this pie chart underrepresents the importance of Switzerland because, of course, the revenues are only in there for one quarter, and we are currently in a strong ramp-up phase. So I think it's safe to say that fundamentally, Switzerland will represent at least 10% of our business going forward as we ramp up. So in other words, broadening the geographic profile. And of course, the addition of Netherlands, once that transaction closes, will even further diversify the geographic footprint. Having said that, Germany remained the largest contributor during the year, and the UK's contribution is growing, driven by a quicker than anticipated expansion of the flagship clinic in Knightsbridge and a strong recovery in London Vision Clinic, as Dr. Jorgensen has already explained. Next slide. Yeah, taking the countries one by one and adding a bit more detail than already given by Dr. Jorgensen. Here I'm showing not just the year-on-year, but a 5-year development of revenues, showing that 2025 was a very robust recovery. Total revenues increasing 11% over prior year, and indeed well over the record year 2021. That is driven, as Dr. Jorgensen has said, primarily by the very strong growth in the presbyopia part of our business, which in fact grew 14%. Of course, it is positive that in Germany we saw a recovery also in the myopia business, which grew at around 5%, so less dynamic, but also recovering despite the overall consumer confidence issues that are lying over the laser market, the myopia market globally. The presbyopia growth of 14%, however, is the dominant part of the story, given that now over 60% of our business is in that space. Next slide, please. Yes, China, basically there are two stories within what is an overall stagnation in the last 3 years of our revenues. One story is a very intense competition and indeed difficult market dynamic in the myopia, in the laser business, where our revenues have shrunk. That's one part of the story. On the other hand, we have strong double-digit growth in the presbyopia piece. They have in this year more or less canceled out against each other. But as we continue our focus on the presbyopia, the more rapidly growing, and as that share in our business grows, that will also drive growth going forward. And I share Dr. Jorgensen's belief that, especially in the big, well-established clinics in Beijing, Shanghai, and Shenzhen, we have quite substantial growth opportunities for the group going forward. One additional comment on Hong Kong. There, we have taken the decision to close our information center on the ground floor and to focus fully on marketing our business through word of mouth and social media. Given the restrictions on marketing that are in place in Hong Kong, we did not find that particular approach was cost efficient. So we will be focusing mainly on the clinic, which is on the third floor. That will, of course, substantially reduce our cost base. And also we have increased there our strategy on marketing. So we expect that sort of from the mid of this year, profitability in Hong Kong or positive numbers will be achievable. And therefore, the Hong Kong's impact on the overall China earnings will increasingly become positive. Yeah, so we see a big turnaround or anticipate a turnaround in Hong Kong in the second half for those two reasons: cost reduction and revenue increase. And again, focus on marketing in key areas like Beijing, Shanghai, etc. We believe that we have significant growth potential in China. Thank you. Next page. Yeah, as Dr. Jorgensen mentioned, after 3 years where revenues did not meet our full expectations in UK, we've had a very good 2025 with a 19% revenue increase in both our locations, both in Knightsbridge and in Harley Street. And that's driven by substantial growth in the presbyopia segment. Additionally, we will be adding through the Betterview acquisition, as Dr. Jorgensen already mentioned, a third location, which is located in the Westfields shopping center. And that will be operated initially not as a clinic because we have sufficient capacity in the two locations, but as a consultation center for patient acquisition. That third location, although we signed it at the same time as the Swiss ones, it had a closing condition, which was the transfer of the lease, which had not yet been achieved due to difficulties in agreeing the final transfer of the lease agreement. But we expect that to happen shortly. So the Betterview UK part of the transaction has not yet been closed. We added that as an asterisk on the earlier slides, but we expect that closing to happen shortly. And then we will have 3 locations in London, and we expect that to also accelerate our growth because there's quite a lot of foot traffic. We're seeing a very positive impact on our business despite the fact that has not yet closed. Next slide, please. Yeah, Denmark has also grown and recovered from last year, but we are not satisfied with the single-digit growth, as Dr. Jorgensen explained. So we've made some changes to the marketing, and we hope very much to be able to take that also to double-digit growth in the current year. Next slide. Yeah, giving you some perspective, a little bit below the revenue numbers. Positive is also that not just total revenues have increased, but also the volume of surgeries is up from 27,000 last year to 28 or over 28,000 this year. So a very positive fact that the surgery numbers have regained momentum. The second part of this slide addresses the capacity utilization rate, which, as you will be aware from past presentations, has been relatively low at around 20%. From my point of view, this represents a significant opportunity because already at this relatively low capacity utilization, we have quite strong EBITDA margins. So you can imagine what those margins will be like if we get closer to full capacity utilization. So without additional capex at these locations, we can grow patient volumes fivefold. As regards the physical capacity, of course, we need to then add surgical and nursing capacity. The reason it's gone down is through the Swiss acquisition. We've added additional capacity, and as you've heard from Dr. Jorgensen, we're in the process of ramping that up. So I think just in summary, I think quite a lot of opportunity to grow profitably through focused marketing measures at existing locations. Next slide, please. Yeah, looking a little bit at the cost side, you can see that that's the top right of the slide, that we've been very successful over the years in reducing costs through negotiations with our suppliers on the raw material and consumable side. On the administrative expenses, you can see at the bottom right, they moved up significantly in 24 to 16%, and we've managed through various measures to bring them down again to 14%. The other two items that I'd like to comment on are, on the one hand, salaries and doctors' fees. We've managed to hold them stable or even reduce slightly this year to 27%, the salaries and doctors' fees. I think we started from relatively low levels in 2021, and I think to hold them around a quarter, I think it's a competitive market for surgical talent, so I don't think we will be able to move them down, but our attempt will be to hold them stable at those levels. Selling expenses, we've relied historically a lot on word of mouth, and that's one of the strengths of EuroEyes, and we continue to get positive referrals from happy patients. But we're also having to spend more through social media and internet channels to accelerate our growth. We continue to be very disciplined, but I think the fact that those costs have moved up reflects the fact that we are looking to increase our growth rate, and therefore are investing more money in the advertising and marketing space. Next slide. Yeah, this has been one of, and continues to be, a strength of EuroEyes. Very strong operating cash flow, giving us the opportunity to invest and grow our business, both through opening of new clinics and through mergers and acquisitions. You can see that our cash and cash equivalents actually went up this year despite the Swiss acquisition. And in fact, that has been one of the questions that have often been asked, when will we fully deploy the capital we raised through the IPO and that we are generating through the acquisitions. And we have, since the IPO, bought London Vision Clinic, bought the Frivis in Mannheim from Mannheim University, and now, as you know, in 25 acquired the Swiss deal. But cumulatively, they did not fully deploy cash, but we have done that now through the acquisition of the FIO Group. So once FIO closes, we will have fully deployed the cash raised, and indeed we are through a syndicated loan raising 75 million in order to enable us to do this transaction. And of course, going forward, we will continue to managing our cash flow so that we can repay that facility as quickly as possible. Of course, that transaction is not yet reflected in these numbers, so these numbers are before the Dutch acquisition, because it won't be closed till probably middle of the current year. Next slide. Yeah, I think that completes my part, and I think I hand back to Dr. Jorgensen to summarize and to give you an outlook going forward.
Yes, let's take the next slide.
Yes. I think our position is very clear. Also, with the acquisition of FEO, we are probably the world's biggest clinic group for treatment of presbyopia. We mean this will represent the biggest growth story here the next few years. And also, what makes us very good, that is, so I think we understand presbyopic patient. We are doing customized treatment, and so it's not easy. It looks easy, but it's not easy. It's a lot of psychology in there. It's very good in our group. We have, as Herr Balacho said, we have the capacity to increase our revenue. So we have high-paid procedures, and we space, and we have staff, and we have slots to, let's see, improve them. And without building new clinics. And last but not least, we have showed this year with two major acquisitions, or at least one very major, FEO, but also Switzerland, where I think in the year we'll be the main player. I think this shows it took a little time to find the right partner and the main target. We finally did it, and it has also here for them been a very big task to do that. So M&A now we need to consolidate it. So we are working very hard on that here at the moment. And the next slide, please. Yes. What will it look like the next years? So the revenue target, the revenue CAGR, low to mid-tens, and I think we see that Holland have shown us how much potential it is in presbyopia. They were able to grow 20% in such a small country. So I think it's very relative to say it like I say here. They are at 10%, and net profit CAGR 10 to the 20s. It's a conservative estimate, but I think that we never know. It's some own factors that like we see in Iran, like we see in Ukraine, like we are seeing with gasoline prices. So you never know, but we didn't feel it yet. So next slide. So we have key takeaway. What you will take away here from today is, again, like I think the several last year, is presbyopic leader. Everybody over 45 get presbyopia, so you can see everybody is our patient. At about 50, look at his iPhone 100 times a day. So it's difficult to put on a reading glasses 100 times a day. You can imagine what happened with the TikTok people. When they get 50, I think they will need to look at their iPhones 200 times, 100 times a day. So a reading glass is very difficult. We have a global presence, so we are now, and I said to you, I believe in the Chinese market. Maybe we didn't always have time, maybe we didn't do the right things, but I think we have the right focus. And M&A, we proved this year that will go on, and M&A still will play a big role to the right partner, maybe in other parts of the world as well. Next slide. Yes, ladies and gentlemen, it was a little about our financial numbers for 2025. It was a little about the outlook. It was about the M&A, what had happened. So Thank you very much for your attention. And I don't know, Barbara, I give the word back to Rosanna and to you.
Yeah, I think we have some questions. Thank you, Dr. Jorgensen. I don't know who will lead off. Maybe we take them in the turn that they were presented. Yeah, I think one first question, I'm aware that some were submitted before.
Yes, thank you, Dr. Jorgensen, and thank you, Mr. Breckville. We will now begin the Q&A sessions. Let me repeat the instruction once again. If there is any investor who would like to ask a question, please type your questions in the Q&A box on the right-hand side of the page, and we will read it out for you. And please note that the Tencent meeting is for listen only. We have received a few questions already. Let us read it out one by one. The first one comes from Mr. Matthew Roberts of Blue Condrum Capital Management. He has 3 questions. Let me read it out and we answer it one by one. The first question is, looking out at the geographic split and in context of the recent acquisition, what kind of growth does the company see over 20 years for additional clinics? In North America and Europe, somewhat oversaturated, or is there scope for additional clinics in those regions? This is his first question.
Okay, I will take the first cut at it, and if Dr. Jorgensen feels I've not fully answered the question, he will then add to my comments. Yeah, my answer to this question would be, when we look at long-term growth, particularly over a 10-year horizon, we see very significant runway, especially, as Dr. Jorgensen has already mentioned, driven by presbyopia, which now represents over 60% of our business and remains a structurally underpenetrated market. In Europe, despite being the clear market leader in presbyopia following our recent acquisition, our geographic footprint is still relatively limited. We are currently active in 5 markets with only a partial presence in the UK. This gives us substantial room for expansion, both through greenfield openings in larger cities and selective acquisitions across additional European countries. So rather than being saturated, Europe is a core expansion market for us where we can leverage our leading position and operating model. In the US, we see what we would describe as a sleeping giant in presbyopia. The market has significant long-term potential, but remains relatively underdeveloped today. Our approach there will be disciplined with an entry once we have identified a suitable target and are ready to scale effectively. Overall, we see deep, long-duration growth potential, especially in presbyopia, which is still in the early stages of adoption globally. Next question.
What other geographics does the company see as having potential for opening clinics?
Our geographic strategy is clearly focused. First, Europe remains our primary expansion priority. There are multiple attractive markets where we are not yet present, as I just mentioned, and we see opportunities to expand both organically and through acquisitions, building on our leadership in presbyopia. Second, the US represents a highly attractive medium-term opportunity. While currently underpenetrated in presbyopia, the underlying demographics and purchasing power make it a very compelling market as awareness and adoption increase. In China, our strategy is different. We will focus on growing within our existing facilities rather than expanding our footprint. Given our current capacity utilization of around 18% on average, we have significant room to grow without additional capital investment. So overall, our expansion is prioritized, capital efficient, and region specific rather than broad-based.
Thank you.
Next question.
Yes. The third question from Matthew is, are there any specific demographics or economic indicator matrix that are being looked at for opening a new clinic? For instance, say a region has 10 million people of a certain level of wealth, that means that would be a 1 clinic per X million or something to that extent. Just any indicator or matrix.
Yeah. I think we take a highly, data-driven and disciplined approach to site selection, particularly given the premium and elective nature of refractive procedures. The factors that we consider include demographics, especially age profile, as presbyopia is strongly age-linked, income levels and willingness to pay for elective procedures, awareness and adoption levels of refractive solutions, the competitive landscape, and the availability of experienced surgeons and clinical teams. That said, we do not rely on a simple rule such as clinics per population. Demand in our sector is influenced as much by education and conversion as by raw population size. And also, as I said, our current network is operating at around 18% capacity utilization, while we are already generating attractive EBITDA margins. This means we can accommodate significant growth within our existing infrastructure before requiring substantial additional capital. Next question.
Thank you. The next question comes from Mr. Tand Luchenberg and Cleo Bouquet. First question is, would you consider a secondary listing in Europe, like a EuroEyes or EuroEyes, since it's mostly a European country? This may lower the valuations gap of roughly 2 times EBITDA after acquisitions versus a 10 times EBITDA market multiple.
Yeah, I mean, we are clearly aware of the valuation gap and have been trading at a significant discount to what we believe reflects the intrinsic value of the business. Historically, part of this was related to the fact that we had not fully deployed the capital raised at IPO, which impacted returns and investor perception. Over the past months, we have addressed this through 2 substantial acquisitions, and we will, once the closing has happened in Holland, have fully deployed that capital in line with our strategy. While the share price has not yet fully reflected these developments, we believe that as we execute on integration and demonstrate the earnings contribution from these investments, this should become more visible over time. In parallel, we are actively reviewing a range of strategic options to address the valuation gap, including potential secondary or alternative listing scenarios. No decisions have been taken at this stage, and any such step would be carefully evaluated in terms of liquidity, investor access, and overall value creation. Our primary focus remains on executing the strategy and delivering sustainable growth, which we believe is the most fundamental driver of long-term shareholder value.
Thank you. The second part of the question says, regarding the Files financing, the deal is partly financed with euro 75 million in bank debt, the first debt the company has ever taken on. What are the confidence, the interest rate, and how will free cash flow be allocated between debt, repayment, and further M&A?
Yeah, this is indeed the first time we have introduced bank debt into our capital structure, and we've done so in a very measured and disciplined way. The facility is structured with standard market covenants, primarily linked to leverage and interest coverage ratios, and we are operating with significant headroom under those covenants. The interest rate is in line with current market conditions for a business of our profile, and we have secured terms that we believe are both competitive and appropriate given our strong cash generation. We've also secured sufficient liquidity and room within the covenants to allow for further acquisitions. Given our strong EBITDA margins and low capital intensity, especially with current capacity utilization, we are well positioned to both service debt comfortably and continue investing in growth.
Thank you. The last part of these questions. Can you disclose details on the syndicated loan, specifically percentage interest, durations, and amortizations scheduled?
Yeah, I think we will be issuing in the context of the fact that this is a very substantial acquisition of ESA. We are required to produce a circular, and that will contain detailed disclosures also on the financing. So I think my comments just now are what I'm prepared to say at this stage.
Thank you. Now we come to the third quote from Mr. Martin Remmelink. He is asking, I am wondering with regards to the acquisitions of FIOS, besides more facilities and scale advantages, does FIO also offer new or other or better surgical procedures where other EuroEyes facilities can benefit from? And how is this vice versa? Where can FIO learn from EuroEyes?
Yeah, the acquisition of FIO is strategically important, not just for scale, but also for clinical and operational synergies. On the clinical side, both groups bring strong expertise in refractive surgery, particularly in presbyopia. In addition, as Dr. Jorgensen pointed out, through the acquisition of London Vision Clinic, we have a particularly strong capability in the innovative procedure called Presbyond, which is a laser method to treat presbyopia, especially for younger patients. And the inventor of the procedure, Dr. Dan Reinstein, is a member of our group and on our board. And Zeiss, who developed this together with Dan Reinstein, is a strong strategic partner of our group. So we are well placed to implement this and also extend that into Holland. So that would also be a very specific aspect of the synergy. EuroEyes can contribute significant experience in scaling operations and standardizing procedures and driving patient conversion, particularly in presbyopia, where we are the market leader in Europe. And FIO, as Dr. Jorgensen has mentioned, has a very strong sales and marketing organization, and that in turn will be something that we can benefit from. So the value creation is very much two-way. Yeah, we can roll out best practices and clinical approaches across the combined platform, and we can enhance efficiency and utilization through shared operating models. And we can accelerate market development by leveraging combined brand strength and expertise. And overall, we see meaningful opportunities to create value through knowledge transfer, standardization, and scale beyond the immediate footprint expansion.
Thank you. The next question comes from Mr. Cyril Bucate once again. You mentioned expecting suites operations to be EBITDA positive from Q2 onwards. Is there on an IFRS 16 basis, that is excluding rent, or does it include the lease rent costs?
I think we believe that on an IFRS basis, we will be definitely cash break even in the second quarter, and we believe that for the full year we will be EBITDA positive even after deducting the rent, i.e. on a cash EBITDA level, if you want to call it that.
Thank you. Now we received questions from Mr. Alex Bones from Rooms Capital. The first part of his question is, what are the business trends across different regions in 2026 Q1?
I mean, we are reporting now on 2025, and we will be also reporting a mid-year on our mid-year results. We do not publish quarterly figures, so therefore I'm not in a position to comment on Q1, which, by the way, we're the 1st of April, so it's still a bit early to do that, even if it were our policy to give quarterly results, which does not.
Second part of his question is, what are the reasons behind the escalating expenses over the years? What is the absolute level and percentage as revenue going forward?
Yeah. I think during my section I had one slide given various categories of expenses, and I think there we showed that the cost of consumables, in fact, are going down, yeah, and that the administrative expenses, which went up last year, we've also been able to reduce, yeah, and that the surgeons' expenses, which had gone up over several years, we've been able to hold them at prior year level, yeah, which I think is still would be our target. I think the only one that has gone up continuously and which may go up further is the marketing and sales costs, and that's very much driven by our desire to increase the overall growth rate. Yeah. But we will only expand that if it's a value accretive.
Thank you. The third part of Mr. Feng's questions. Do you see another M&A happen anytime soon? Would you use debt to finance it?
First of all, our priority, having done two substantial strategic acquisitions, one of which, as we've described and Dr. Jorgensen has described, was a turnaround case, and the other one, which is a very substantial acquisition of ESA. Our focus in the next 18 months is clearly on integration. Yeah. And having said that, we are open and, we are still, looking at smaller fill-in acquisitions, yeah, which we can finance from our existing cash flow and with the headroom that we negotiated in terms of our syndicated loan. Yeah. So that is what we are planning. On the other hand, if a strategic opportunity came along, we have the flexibility in principle to do it, but that is not something that is our current plan. Our focus is on integration and adding fill-in acquisitions in specific cities within our existing geographic footprint.
Thank you very much, Mr. Bricklow. We have received many meaningful questions today, and we have answered all of them. May I ask if Dr. Jorgensen or Mr. Bricklow, if you have any final remarks to share with the management, with the investors before we conclude the meeting?
Dr. Jorgensen.
Well, no, I'm fine. I hope we're able to see our expansion. I also, we gave the answer to many of your questions. We are very willing also to take your question afterwards through our investor relationship department. So no, I'm very happy, and many thanks for your attention.
Also, from my side, thank you very much for your attention.
Thank you very much. Thank you, management. This concludes our presentations today. Should you have any questions later on, please feel free to contact the IR department. Thank you for your participation and wish everyone good health. You may now disconnect. Thank you once again.